Sebastian, the market is clearly worried. There are all sorts of little tea leaves we see out there, including a small German bank I don't want you to comment on. But the basic idea, Sebastian, of little stories adding up into a market decline, a market correction, a market bear market. Are you seeing a summing of stories, or can the big picture halt that?
That's a very good way of phrasing it. So we could either think about a lot of these little macro flashpoints coming together, or we think there's a big one big theme that is dominating it. And our conversations with clients strongly suggest there's one big theme, and it's the worry about growth, and in particular the worry about the Chinese growth cycle. Most investors that we speak to say China has to slow further because of the overhang from trade, and that's what we see in the pricing. Look at how the luxury goods have performed, how the capital goods in Europe have performed. There's a worry that China growth will slow, and frankly, we think the China growth cycle has already troughed.
Elsa Lignos, when you look at renminbi as a proxy for China growth, what do you discern? What do you see when you look at CNY, you look at the currency off the shores? I mean, what's the nuance there you see in renminbi?
It's interesting because actually this week we've seen some record volumes going through in the onshore market for renminbi. And that's consistent with a central bank that is doing the best it can to try and prevent further renminbi weakness. We saw something similar actually in August of 2015 when we saw the one-off devaluation. So at the moment, the Chinese authorities are doing everything they can to prevent further renminbi weakness, and they're barely managing to keep still.
Sebastian, one of the things that we've been trying to figure out this week overall, but especially today, is what exactly is the catalyst for this market rout?
So the catalyst, as I already said, is we've seen a weakening in growth momentum. Euro area PMIs have disappointed again this week. There's a lot of concern that the China PMI will be weaker. So it's very clear if the growth continues to weaken, if the PMIs continue to slide, this will continue. If, on the other hand, we see signs of a stabilization in the macro picture, then investors will have to conclude that the market pricing currently is too bearish.